This one, look, the 2% gap on a day like this, guys, is really tough to do. Morning, everybody. What's going on? So, everybody good? ¿Cómo estás? Bien, bien. ¿Y tú? ¿Y tú? All right. So, let's just take a look real quick. We got market still getting smoked out pre-market. We're looking at about a minus 2% move, which is, frankly, for a pre-market move, a little bit aggressive to the downside. As we have seen in the price action of stocks recently, spikes have been getting faded. Even yesterday, you know, when you got like spikes in the market, they just haven't been holding. The price action, meaning that the way price has been moving, right, has been deteriorating, especially underneath the hood of the market, with breakdowns leading breakouts on a daily basis for the last couple of weeks, which is a sign of deteriorating market breadth. And we're starting to see some of that come to fruition. There's a change in market structure that's happening because traditionally when we get oversold in the market, meaning stochastics under 20 or with your T2108 indicator, you know, getting under 20, it usually leads to long-term bounces, and we haven't really been getting that at all. And so, you know, see this thing hit 10. Usually when it hits 10, like you get kind of that once-a-year bounce, and instead it's kind of going bear flag life. So that is kind of a that's a deteriorating market right there. So just something that we personally have to kind of keep an eye on, you know, as this thing starts to kind of move along. Today's going to be a sell the rallies kind of day. So when you have like a market like this, you know, if it gaps down this big, you can't short everything into the hole because you'll lose a lot of the daily range on this already because you're already down 2%. So what you got to do is let the market pop up, see how it starts to react once it pops. Like say it pops into 172, and then you start to kind of roll over, right? You need a little confirmation. Let's start to roll over. You get some red candles to hold there, some price action that's building under the level or at your 9 EMA. Then what you can do is start looking at potential shorts on this. The easiest thing to do on a market like this, where things are just nasty, is stay away from all the junk, meaning that like you want to like stay in stocks that are really liquid, that have like a really good range. Hey, Ryan. Hey, Jeremy. Hey, Cody. What's up? Hey, Denny. Hey, Robin. Hello. Hey, Mr. Tom. How are you doing? Still, what's up? Yeah, good to see everybody. So, yeah, you don't want to chase anything in the holes. What we want is really liquid names. We want to stay away from junk. I want to stay away from, you know, $1.50 stocks. That is just the nature of the game right now. The Bulls on Wall Street website is down. We're looking at what's going on with the server or whatever. Just the nature of the game sometimes. So what we want to do here, this is going to be our watch list today. TVIX, already flying pre-market. You can see this thing was at 41, came up to 49. Looking very, very nice today. TVIX is one of those things you can't chase it into the hole, meaning like if you buy it on strength, it almost always comes back. TVIX is really good. So at the open, it'll often spike up, and then it'll start to come back. Let it see where it holds, 9 EMA, 20 EMA, and then from there, you know, see how it reacts, and then I think you can pick along only off dips. This thing works on dips, especially at the open. You chase it, you die on this thing. AMD for the bear flag here. If it breaks below this low here, 2370, will trigger another day trade. SQ, we've been looking at this bear flag forever. We should break below this trend line now. You can see here on a 30-minute chart, you've got like really just test. I wouldn't be surprised to see 64 on this thing. TQQ. So TQQ is the index that measures the NASDAQ, but times 3. So if the NASDAQ moves 2%, this will move 6%, which is a good range. You can use this as a proxy and day trade it as a proxy for the actual market if you can't find any stocks to roll. I'd stay away from Roku short because it's already on day 4 now. So kind of take that off. This was your classic bear flag, but it's already had its day. One thing to keep mind of, gold is starting to peak up pre-market. When gold starts to peak up pre-market, what's going to happen is gold stocks suck to trade. Gold stocks suck to trade, but gold ETS nugget has good range. So what we want to do is keep the nugget. It's in a bull flag already here today. If it comes out of this range, which it's already doing, it's going to be good. But what you got to do with this nugget is one of those that doesn't move well on strength. You've got to hit it on dips and hit it on pullbacks to 9 EMA, 20 EMA. Then it seems to work out much better. JNUG is another one that has like a very, very similar. You're right, Lou. You can do SQQ too. JNUG is another one that you can see here. You got this big pop. See this volume expansion right here? When you see a stock pop out of its range, out of its base, you want to see a big volume candle on this. When you get something like that, guys, and SDOW, SCOW, SMOW, TQQ, FQQ, SMAMA, DOO, they're all the same, right? They just play the market. So you just pick one. It doesn't matter. So pop up, come down, right? You're sitting on the 9. You're going to come out of this range. You know, obviously, if you could get over this 10 spot, you start filling this gap, and, right, you've got a little bit of upside to go. Add this ABBV to the short. This is a flat bottom breakdown. 1 test, 2 tests, 3 tests with the 9 EMA coming down. This one should be good. It's got good range, good volume. On down days in the market like this, you want to focus on the most liquid names, right? You want to focus on the most liquid and rangy names. When the market's down, even old man stocks will start to move around. You got this work from Simon. This is your quintessential bear flag. You got push down, sideways movement. It's starting to peak below its trend line. This should have some, all these should have a little bit more downside. All these, you cannot short them into the hole. Hey, Mongolian, how you doing, Bart? You can't short these into the hole, right? Chase them down. You got to wait for patterns. You neither have to have an ORB, but most likely with the market coming down this much, you want to let these things squeeze, let them pop into the EMAs, and then hit the rollover, okay? When the market is down this much, I repeat, when the market is down this much, you can't always just short everything into the hole because you've used up a lot of the range. So let the market spike down a little bit to open and then let it kind of come back and set itself up. Be reactive and let the market come to you, right? Let the market show you what its true colors are going to be today, and then you make the trade. What happens is if you start taking a guess and you're like, oh, man, today we're going to get a crash and just start shorting everything without an intraday pattern, what will happen is you'll get smoked out, right? So we got to let the market give us the signal. So we watch the QQQs. You can watch the SPY also. Start watching for clues. See, like once it pops, see where it starts to settle, right? If it starts to settle and then it starts to roll back over, then, take this thing back down to the downside, all right? It's going to be very, very important. Same thing on the SPY. You got about 270. You can already see you're trending pre-market. My go-to vehicle on days like this is this TVIX, though. We don't got to get too fancy. TVIX is, right, an ETF, and the market goes down, this thing goes up, and it goes up with some big range, right? On nasty days, this ticker could have a $10 range on it. Even if you've got a small account, you're trading 100, 200 shares, you can catch a nice day on this, right? In trading, it's very, very important to focus on range. It's not necessarily the price of the stock and how much percent it's up because, look, if a stock is up 50%, but it's just all over the place and it's just squiggly and most of it's made on the gap, then you're not going to really have anything to necessarily trade, right? It's untradeable at that point, so you got to be just careful with this. The focus is always on range versus percentage gain because the stocks can often have big percentage gain, but they don't even give you any good trading opportunities. We want to focus in on the range, and we're going to stay away from all the little turds today because a turd is a turd, and today's not a good day for turds. If that answers your question, beat, right? You can see on the downside, there's quite a few stocks getting smoked out. I think this EDU, this has got Bear Flag Life over here. This one should have some decent liquidity. You're already seeing a big push pre-market. I would definitely keep that on the gapper list for yourself. You know, if this thing pops and fades off at the 9 EMA, I think EDU could be a nice one. Jump. Staying away from all these little small ones today. Man, TROY, what a blast from the past. Didn't it just seem like yesterday this thing was at $300? Made you feel all warm, made you feel all cuddly, right? And it was an amazing run. The trend is over on pot stocks for now, guys. You know, you don't want to even try to bottom fish these things. I do think they'll probably have a little bit of a bounce in the next couple days, but it'll be a dead cat bounce, right? A dead cat bounce is a bounce where it's just a relief bounce because you're getting so oversold, you know, you end up bouncing. And so I wouldn't be surprised to see, you know, CGC or TRY kind of come back and have a bounce at, you can see this is like a level over here, but the bounce may just be like $1 or $2, right? When the trend ends, the bounces are really, you know, small. When the trend is hot, the bounces are good, right? And I don't know when the midterm elections are. Next year? When's that? Next year? Who knows, right? This thing comes in. Maybe you get something around here, but it'll be short-lived. Once the trend dies, it's very, very hard to come back. Like, see, you got a beautiful pattern here with this flat top breakout. When failed moves means fast moves. Failed moves means fast moves. And so you just can't trust them at that point. But we are at a bounce spot. Just the bounce may be, you know, a day or so or 2 days or, you know, whatever it might mean. Always remember, any failed move is a fast move. So you get a hot pattern and it fails, most likely it's just fucked for the next couple days. So you got to just chill out on it and, you know, do what you got to do. Junk. Look at see Cron, $7. Junk. So you can see there's all sorts of stuff just moving around. When the market gapping down this much, obviously you're going to see a lot of stocks on the gap down list. Remember today, just stick with liquid names. Use the ETFs like TQQ. You can use SQQ. SQQ, when the NASDAQ goes down, this one goes up ×3. So if the NASDAQ goes down 2%, this one will go up 6%, right? So you can use an inverse ETF. You don't even have to necessarily short a bunch of stocks. I do like this EDU potentially also. And to keep the liquid names, AMD, SQQ, TVIX, and so on and so forth. Let's be good. Let's be great. Let's be fast today. Let's go out and do what it is that we got to do. Guys, there's money in the market to be made. Just let